The interest rate on the most popular U.S. home loan surged by the most in nearly 2 years last week, shooting above the 4% level for the first time since 2019, as fiscal markets anticipate that the Federal Reserve will respond to the loftiest inflation in a generation with an aggressive run of rate hikes. In today's video, we'll give you the latest update on U.S. housing market frenzy. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. The Mortgage Bankers Association on Wednesday stated its weekly measure of the average contract rate on a 30-year fixed-rate mortgage climbed to 4.05% in the week ended February 11th, from 3.83% a week before. That was the loftiest since October 2019 and the largest weekly increase since March 2020, when the onset of the coronavirus epidemic was rolling fiscal markets. The Fed responded to the epidemic-convinced recession by cutting its standard rate to near zero and buying trillions of bones in government bonds and mortgage-backed securities, and mortgage rates fell to major lows below 3%. But with the economy recovering, the job market nearing full employment, and inflation running at the loftiest rate since the early 1980s, the Fed is now seen swiftly reining in that accommodation. Policymakers have gestured an initial rate hike at their upcoming meeting in mid-March, and officers are mooting openly about how fast to go after that. That reset has driven up the yields on the Treasury securities that impact mortgage rates, and home financing costs have followed suit. MBA's 30-year contract rate has climbed roughly a full probability point in about 5 months. The rate rise is crimping application volumes for mortgage refinancing in particular, with MBA's refinancing index dropping to a 2-year low and the refinancing share of all loan applications at the lowest level since July 2019. Overall loan application volumes fell 5.4% last week, and purchase applications dropped 1.2%. Economists had anticipated rates to rise by the end of 2022, but the surge in rates in the past 2 months has numerous analysts wondering what comes next. As mortgage rates climb, dropped buying power might ease some of the pressure on home prices. A slowdown in housing prices can soon be expected, Johnson says, but competition will remain fierce among those who can still afford to buy. Those looking to refinance should be suitable to find good deals, though at rates a bit higher than the current position. The bottom line, if you see a rate that fits your requirements and budget, the time to do that refinance could be now. In fact, numerous homeowners with a mortgage haven't taken advantage of the low-rate environment. Among homeowners with a mortgage they've had since before the epidemic, 74% haven't refinanced, according to a recent bank rate survey. So that's all for today's video. Let us know your views in the comment section below. And don't forget to like this video before leaving. Thanks for watching.